Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 16th day of April, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of your office, away from your desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during this broadcast on our YouTube channel, and that's youtube.com/CFRN. We also archive each and every daily show on our YouTube channel. Currently, we have over 1,600 daily broadcasts archived for your viewing and educational pleasure. Let's open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, for your grace. We thank you for this opportunity to meet together today. As we gather, we ask that you surround us with your love. May we see your beauty, feel your love, know your wisdom, and experience your power. May we find the comfort we desire in you and the strength we need in your name. May your presence be with us every hour of the day. May your love be the passion in our hearts. May your joy be our strength when times are hard. May your presence be the peace that overflows in our lives. In Jesus' name we pray. Amen.
Amen.
Amen. Happy Friday.
And Dwayne, you need to show your charts, please.
Yep.
Oh my
Showing the screen.
goodness. What has happened? I click it and it don't show up. There we go. How about that?
There.
All right. Let me give you the numbers from around the world. The cash markets, the indices as they're called. Starting here at home in the U.S., the Dow's up 96 points. NASDAQ is down 13. S&P 500 is up 7. The Russell 2000 is up 2. That's some pretty quiet trade. In the commodity basket, crude oil down 3 cents, trading 63.16 last. And we did roll forward this morning in the live training room to the June contract. So we're now trading the M contract in crude. Gold up $12.80. trading 1779.60 last. Silver up 15 cents, trading 26.12 last. In the Asian markets at the close, the Nikkei posted a gain of 40 points. Shanghai rose 27. The Hang Seng gained 176. Closest thing we have there to a mover and a shaker would be the Shanghai, which is up just shy of 1%. In the European markets at the close, FTSE up 36, the DAX up 204, the CAC up 52. Now for the DAX, that's a gain of 1.25%. For the CAC, it's a gain of just under 1%. But that gives us a green day in Asia. It is a green day in the UK. And due to the NASDAQ, it's a mixed Radio Friday here in the US of A. So with that, we'll go to Michael, get a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll look at the concierge trade alerts, the logic alerts, everything that's happened so far this week. All that and answers to your questions when I return. And as Michael has the charts here and goes through the recap, if you have questions for him, don't hesitate to just put them in the chat box. And of course, he'll be happy to answer them for you.
Indeed.
And Michael, I can see your screen.
Yep, here it
And
goes.
now I can see your charts. So it's
Okay.
all yours. Take it away.
Thank you. Thank you. Here we go. Is it that one? No, it's this one. Here we go. All right. Here we go. Good afternoon, everyone. Happy Friday. Today is the 16th day of April, 2021. If you've not taken a free trial with us, excuse me, if you've not taken a free trial with us and you want to, go to the homepage at cfrn.net. Scroll down to where it says free 5-day trial, no credit card required. Click on that. And right here it says eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the link, we don't know that you took the trial, so you gotta make sure you click on the link. All right. Spreadsheet. Now, on the spreadsheet, we have, if you're going to read the spreadsheet, I got to say this over again. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 16th day of April, 2021. Today, we had kind of a rough day of it. We got positive again on the day at the very last trade. Today, we lost 8 ticks in crude. We made 10 ticks in gold, and we lost 1 tick on the ES. That put us barely positive on the day at $7.50. Today it took 35 minutes and 8 trades to get to the goal for the day. At that point, we're up $130 a contract, and we took a total of 12 trades. So on the month now, we're at $5,490. That's over 11 trading days, averaging $499 per contract per 2-hour trading day. We've now gotten our goals 71 out of 72 days this year, and this was definitely one of those days where you want to put the mouse away after you get your goal for the day. But on the year now, we're at $58,192.50. That's over 72 trading days, averaging $808 per contract per 2-hour trading day. Okay. Now, let's get into what did and didn't have it. I'm just going to start with gold. Yeah, let me do this thing. Okay. Now, gold wasn't too bad today. It was doing pretty much what it should do. Most of the time. We had some nice YBR trades here right at the beginning of the day. You see right in here. Oh, our first trade of the day on gold was right here. And I think I missed these things up a little bit. Our first trade of the day, we picked up a couple of ticks. I don't think I accounted for those. So it did end up being a little bit better than $7.50. The next trade, we picked up 5 ticks, I think. Put us, yeah. Now we picked up 1 tick on the first trade, 4 ticks on the second trade to put us at +5. Then 3 more ticks here to put us at +8. Break even, a break even, See, I was given the areas that it was going to go to, and it did eventually go to them, but it pulled back first. It gave us enough to get out of break even, and then pulled back, and then went up to those areas. In both of these cases, right here and right here. I missed this short over here. This was a pullback area over here that I went up to. Then I didn't get filled on that long. That would have been nice to have. It went right up to the target area, pulled back down to the pullback area, hit that, then gave another long trade right here. We picked up a couple of ticks on that to put us at plus 10. And this one was at the end of the session. We ended up with a break even on that, and I didn't count that one. And let's see, during the break. Now, step one is make sure you have a trend. We didn't really have a trend. If you were going to take a trade, there would have been one right here off the BBC, and that would have been it during the break. But we ended up with plus 10 on the gold on the morning session. Now, on the crude oil, let me scroll back all the way to the beginning. Crude was difficult today, but it was rollover day for crude. And we started out in here. It was given some decent trades right here on the way down, but this is as we had just rolled over. So I wasn't really on top of things right there. Then we got into here. I was given target areas for it to get up to, target numbers for it to get up to, and it did eventually, but it took forever. It was right in here, I believe. Went 4 ticks into profit and then came back and then went up. Over here, we ended up with a break-even trade. On this trade, a stop out. This one stopped us out pretty much to the tick and then gave an opportunity to get a break-even on it. But either way, it stopped us out. And at that point, we're at minus 8 ticks. We had another break-even trade right here that ended up going up to the target area that I had drawn in. But that was during the break. Well, the trade was actually right at the end of the session. But the target hit was during the break. So we ended up with minus 8 on crude. Okay, during the break, other than hitting the target, there really wasn't anything to do with crude. All right, and the ES, our friend over here. Let's scroll back a little bit further. Now, okay, here we go with the ES. Our first trade in here was a break-even trade. That took forever, consolidated forever. It eventually pulled all the way back up here to the YBR. Then it finally gave a short. We picked up 2 ticks on the first trade on that, 2 ticks on the second trade to put us at plus 4. Then we had a break even. Then we had a nice run up here, but it didn't give us a trade setup. It did right in here, and then it gave these kind of things right in here that were kind of elusive, meaning we had great separation down here, but it was just going sideways, and it pulled back down, hit the BBC, and went. And it looked like it was going to do the same exact thing here, but then it turned around and kept going down. But over here was our next trade. At this point, we had been up to plus 4, and we hit this minus 8 ticks to put us at minus 4. Now on this one, I should have gotten out of break even right here. I should have had my stop at break even right there, but I messed that one up. I had 3 trades going on at the same time on that one. Then I picked up three ticks here right at the very end, and that's what put us at minus 1. Okay, and during the break, nothing. It was YBR trades, 1 here, 1 here, and 1 here. 3 YBR trades in a row that worked, but it was just difficult to trade it today. Once again, difficult to trade it. So that brings us back here to the spreadsheet again. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 16th day of April, 2021. We lost 8 ticks in crude, made 10 ticks in gold, and lost 1 tick on the ES. Put us at plus $7.50 this morning. Today, it took 35 minutes and 8 trades to get to $130 a contract, and we took a total of 12 trades. So on the month now, we're at $5,490. That's over 11 days, averaging $499 per contract per 2-hour trading day. So far in the year, we've made our gold 71 out of 72 days. Goal. 71 out of 72 days, not gold. On the year now, we're at 58,192. That's over 72 days, averaging $808 per contract per 2-hour day. Okay. All right. That said, if you have not taken a free trial with us, go to the homepage here at cfrn.net and scroll down right here where it says free 5-day trial, no credit card required. Click on that, and you'll be brought here to eminitrainingschool.com. On this page, all you need to do is scroll down to where it says 1 week free trial. All we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you gotta make sure you click on that link. All right. All right. That's it, guys. With that, we can pass it back out. Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready. Let's see if my screen is. There it is. All right, recap of the recap.
Today, it took 35 minutes and 8 trades to get to the goal at $130 a contract.
Good job. As always, Frederick, I see your question. How's John? Mrs. Commentary. I miss his commentary too, Frederick. And I've known John since the late 90s. And he's been one of the hardest working guys I've ever known. Sort of an around-the-clock kind of guy. Last time I spoke to him, he had difficulty carrying conversation. And so I ask that all of you please keep him in your prayers. This is something I think beyond COVID. What the doctors don't seem to be certain, but his health is fragile. And so please, thank you for the question, Frederick, and all of you. And I know that everyone misses him. He was always just a great voice to have on the show every day. And again, I've been friends with him since the late 90s, so I'm very concerned about him. And we just have to trust God and just continue to pray for him that he comes back. And he strikes me, based on our relationship of many years, I believe that he will come back better than ever at some point, by God's will. So, with that, let's take a peek at the alerts so far this week. Logic 247. Okay. We have since Sunday night at 6 p.m. Eastern. That's when the global markets open. Not 9:30 Monday morning. The markets open Sunday night, 6 p.m. Eastern. And they remain open around the clock until Friday afternoon at 5 p.m. Eastern. There's a 1-hour break each day. So Monday, the first break is at 5 p.m. Markets go quiet for 1 hour. Sweep the floor, empty the ashtrays, and then the market reopens Monday night at 6 p.m. Eastern for the Tuesday session. And that process repeats itself each day throughout the week. So far this week, we've issued a total of 61 alerts. 11 never triggered. Still waiting on the results of 5. We've had 45 actionable alerts, of which 4 have been stopped out based on not risking more than $300 per contract per trade, but less when possible, based on market structure and a very simple 3-step method that I teach all of our traders. Now that's 9% of actionable alerts. That's not a typical week. A typical week will see 20%. Last week, I think the number came in at 19%. And so 20% is the typical week. Now, I don't do this every day, but I did it a few weeks ago, and I'm going to do it again today just to give you a little food for thought. Those of you that are passport holders, those of you that receive the alerts. Now, we have traders here in the US and in the UK and in other parts of the world. And so the alerts flow around the clock because the markets are open around the clock, and an alert is posted whenever opportunity presents itself in the specific markets that we follow. So because of time and man's need to sleep, it would not be possible. Well, it might be possible, but it's highly improbable that anyone would be able to trade all 45 of the actionable alerts. But in a world where you could, I'm going to do some math here, and I'm going to lump the PT in with the stomp outs. That gives us 17. 28 versus 17. Now, we know that many of the alerts offer up 200, 300, 400, 500, $1,000 of potential profit plus with each alert. What if on these 28, if you could just average, okay, $300 profit per alert? That would equal $8,400. And now these 13, there was profit available in these. They just did not make it all the way to the target, but they got to 60% or better. So for the purpose of math today, we'll just lump those right in with the stop outs. And while we don't want to risk more than $300 per contract per trade, we want to risk less when possible based on market structure. But for the sake of math, let's just say we risk the full 300 on all 17. Well, 28 times 300 is 8,400. 17 times 300 is 5,100. And if you're paying an $8 commission on average, round turn, and I know that many of you pay far less, if you're paying more than that, you really need to call Bert Schlichter at 866-928-3310 so he can fix that for you. Obviously, you're trading somewhere else, and if you're being charged more than $8 per round turn, do give Bert a call. And so if you traded all 45 of the actionable alerts and you paid an $8 round turn commission, that would be $360. So if you took that 3,300 conservative number and you subtracted the commissions, that would equal $2,940 after commissions. Okay, which isn't, any day I think that you can make any week that you can make $3,000, that's not so bad. There's worse jobs out there. But if you've earned the right to trade 2 contracts, that becomes $6,000. If you've earned the right to trade 10 contracts, that number becomes $29,000. Okay? Now again, because we have to sleep, we have to rest, many of us have, day jobs and other responsibilities in life, trading all 45 actionable alerts, most likely not possible. But this is what it would look like if you could, and you could average 300 profit on 28, and you risk the maximum 300 on 17, even though there were only 4 actual stop outs. Well, this is the math. And that's what this is. This is a function of math. Okay? This part has nothing to do with our particular methodology or strategy. That's just math. Math never changes. Math is truth. So this is where we stand on the week. We still have a few hours left in the week, and we're still waiting on the results of 5 trades. And it's possible that during today's broadcast, we could find some trades. So with that said, let's jump over real quick to the concierge trade alerts. This was our original alert service. We did a 3-year public beta before we launched it. I think it's been about 7 years now since we launched it. They are different. The logic alerts flow around the clock as opportunity presents itself based on current price action. This is a static report published once per session shortly after the Globex Open. Globex opens at 6 p.m. Eastern. I got them out last night at 6:35 p.m. Eastern. We cover the S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. There are 2 numbers for each market. Now, on every trade, both logic and concierge, the final trade to target is always the weekly trading zone above on a long and the weekly trading zone below on a short. Once this report is published each evening, the idea is to go to your chart and draw a line in the sand at 41.69, draw a line in the sand at 41.43. From that point forward, if price starts trending up towards 41.69. That's bullish. So logic will be looking for opportunities, windows of opportunity to buy the market. If price starts to decline to 41.43, then logic will be looking for opportunities to sell the market. Once price is above 41.69, we're only thinking long. And once price is below 41.43, we're only looking or thinking short. Again, we do the S&P, the Dow, the Russell, crude oil, and by the way, we have rolled crude as of this morning to the M contract. Last night's concierge alert was based on the K contract, but the last logic alert I put out this morning was based on the June, the M contract, and going forward, everything will be June. NQ, gold, and silver. Okay, so if you don't have a screenshot, you want one, grab it, 54321. Okay. And hey, I need to fix something here. I noticed it yesterday. Give me one moment, please. Let me see if I can quickly find what I'm looking for. I'll try that one more time. Well, I can't seem to find it. The thing I'm looking for. Give me one more second. You're so kind. Thank you for your patience. I'm sure you'll be greatly rewarded in the afterlife. Just give me one more minute. Well, know where it's supposed to be, but it's just not there. Okay. All right, so I won't waste any more time. I'll have it cleaned up by Monday. I know you have no clue what I'm talking about, so I don't want to bog you down with details. Just get to the good stuff. Okay. What do we have? Can you believe I'm actually saying it again? We have another new all-time historic high in the S&P 500 E-mini futures. And the fact that we're at all-time historic highs, if you look left, there's nothing there. Now, we teach all of our traders to look left when trading long, when buying the market, to see where obstacles exist. But when you look left at an all-time high, there's nothing to see, so you got to look up. Our next obstacle overhead, based on math, not politics, not pandemics, but just math, 14th century math, to be exact, Fibonacci. These are Fibonacci price extensions. You're probably familiar with the retracements, but you can use that same golden ratio and flip it on its head and project into the future where price may find a resistance. And so we've overcome the 38%. Overhead, we've got the 50 at 42.23. Now, when price hit the 24% Fibonacci price extension, I would have to pull this back down to where the high was at that day, but 24, it took some time to get through. The 38, it took some time to get through. No doubt if we make it to the 50, it will, we don't fly right through it. It will consolidate, and it could, ultimately, one of these will most likely be a turning point. Okay. So for now, we've just got to adjust this to embrace today's new all-time historic high. And that high is 41.78.5. What's special about 41.78.5? I have no idea. What I do know is the reason that's the high, the all-time historic high, is because no institution, no fund manager, no retail trader who was actively trading at the time, nobody was willing to pay $41.78.75. There were orders in the DOM, there was supply, there was inventory, but nobody clicked their mouse. And that, I don't care what you hear anywhere else, that's why that is the current all-time historic high. And that same reasoning was true here and here, here and here and here. So what we've done is we've embraced the new all-time historic high for the entire move up, which began the end of October, was the low, and then it was November 1st of last year that we began this climb. That would be way back here. The low put in on October 30th was 32.1775. Then on the second day of November, off to the races. We got back above the green line, which we call the BBC. Stands for Bull Bear Cross. When price crosses below the green line, we're bearish, we anticipate lower prices. When price gets back above the green line, we're bullish, we anticipate higher prices. The other indicator, the red and blue one, is called the CFMA1. I refer to it as red and falling, blue and climbing. Red and falling is bearish, represents resistance. Blue and climbing is bullish and represents support. And the step line serves a similar purpose, and it's also used to determine exit signals on the 30-minute chart and potentially even on a daily chart. So from this low on October 30th to the new all-time historic high put in today, the shallowest Fibonacci price retracement is the 24% fib, which currently resides at 39.52. We also do fibs on our daily chart on the last leg up. So those of you that have been following the show for any length of time, you'll recall when this was the last leg up, and then this became the last leg up, and now this has become the last leg up. So we have to embrace that new all-time high as well. Now, the lower rung on the ladder, that'll never change. That's history. Okay? Up here is the one we have to adjust as the market continues to climb. That gives us a 24% Fibonacci price retracement at 41.01. Now that's the shallowest fib retracement of just the last leg up. The entire move, it's down at 38.52. Now these Fibonacci price extensions, which create, you can think of them as targets, you can think of them as obstacles. But once price overcomes the 24% fib extension, and you've got the 38% extension, and then the 50, the 62, all the way up, okay? All the way up to 100%. Now, if price were to find a top today, not saying it will, but as I mentioned the day before yesterday, I think it was, the step line, which I've said we use to find exit signals on the 30-minute chart. On this move up, notice that the step line, it is on the left side of blue and climbing. Blue and climbing is bullish. When we're above the BBC, we anticipate higher prices. When we're above blue and climbing, we anticipate higher prices. And on a bullish move, the step line will be on the left side, as it is right here, the left side of blue and climbing. But right here, something happened. Something changed on April 12th. The step line crossed from the left side to the right side. Had this day closed below the step line by even one tick, that would have been our exit signal. Now, all alerts have a target. On the logic alerts, there's usually multiple targets. Initial target, second target, third target, and the final trade 2 target. On the concierge alerts, there's one target, which is the weekly zone above on a long or the weekly zone below on a short. If this red candle had closed below the step line, that would have been an official exit signal, but it didn't. Buyers came in, they bid it up, it got us back above blue and climbing. Okay, actually we closed one day below blue and climbing, but we found support at the step line. And so the climb continues. However, the dynamic has changed. This does not look like a market that's running out of steam. But this indicator here tells us that there's some weakness here that perhaps we just can't see with the naked eye. So we'll be watching this very closely and price. I suspect we could be headed into a rounding type of top formation. Now, I don't know what's going to happen next, but using our 30-minute chart, our indicators, and our strategy, we do know with certainty what the next high probability move is. And when I went over the logic alerts with you and showed you the recap a few moments ago, I said on an average week, 20% of the logic alerts do get stopped out. So while we do know with great probability, with great certainty, what the next high probability move is, 20% of the time the market does something different other than the next high probability thing. Why? Because the order flow changes. In other words, if we're in a long trade, that's because there's more buying pressure than selling pressure in the order flow. But in the midst of a move, in the midst of a trade, that can shift. Suddenly we have more selling pressure than buying pressure in the order flow. That's why, on average, 20% of the alerts do get stopped out, because the order flow changes midstream. We go to the daily chart at the beginning of each session. Whatever your trading session is, it might be in the morning, the afternoon, the evening, middle of the night, doesn't matter. Doesn't matter what market you trade. I suggest you look at the daily chart and identify from a high elevation where resistance is, 41.78.5, where support is, 41.54.25. If we take out the high of the day, our next resistance is up at 42.23. If we take out the low of the session, then our next support area would be 41.42. That's where the step line is. Below that, 41.34. Below that, 41.01. Price will return to the BBC. Price always reverts to the mean. On a daily chart, on a 1-minute chart, on a 30-minute chart, on a monthly chart, on the S&P, the Dow, the Russell, NQ, all markets, every time frame, price always reverts to the mean. Just so happens that our mean is green, and we call it the BBC, Bull Bear Cross. Okay. So once you've identified those, now you're ready to go to your smaller time frame and start trading. You might trade on the 4-tick range chart. You might trade off the 30-minute chart. But all the principles, all the strategies are identical. No matter what time frame, no matter what market. Markets are fractal in nature. You've probably heard that before, but chances are nobody ever really explained it to you. So let me explain it again. Price flows on a daily chart the same way it does on a 1-minute chart, a monthly chart, and everything in between. So with that said, let's go to our 30-minute chart of the S&P. And these are drawings left over from the workshop last night. Now, I said price always reverts to the mean. That means that price always comes back to the BBC. When price pulls back to the BBC, we expect it to hold. It holds more often than it doesn't. So we consolidated for a number of hours here from 8:30 p.m. Eastern last night until 3 a.m. That's the London Open right there. London buyers came in strong. We climbed the back of blue and climbing. And then Wall Street opened. Interesting how the London Open sent us higher. And then when Wall Street opened, there was a lot of profit taking. Okay? But where did price go? Right back to the BBC. Price always reverts to the mean. When price drops to the BBC, we expect it to be good support, as it was here, as it was here. Now this is a bullish cross, so we had an incredible move to the upside before we got the retracement, but we got the retracement. We always get the retracement. That's how markets work. You get a leg and a retracement. Leg and a retracement. The pullback holds more often than it doesn't, but roughly 20% of the time doesn't hold. Bearish cross, leg to the downside, hit the target, retracement, the pullback held, but the leg it gave us, we hit blue and climbing, which is support. So we've got a low and then we've got a higher low. This is our first indication that as opposed to getting another leg to the downside, things may be about to change. And they did right here. This bullish cross took us up across the zone at 41.47. This area right here. And then price pulls back. If it always held, we would have a stagnant market that would be untradeable. So we know 20% of the time, on average, the pullback won't hold. But I mean, this was a big, this red candle looked like it meant business. I mean, it's pretty serious. We fell in the first 30 minutes of trade. In fact, we opened and initially went higher. The open was 77.25. We popped up to 78.5. Then the bottom fell out. But once we hit the BBC, we spiked it just a little bit down to 63.5. But we closed above the BBC at 41.65.5. Next candle opens at 10 a.m. Eastern. Sellers take the ball, attempt to take us downfield. Can't do it. Now, this high right here was once resistance became support. That process repeats itself over and over, again and again. If you've ever played with Legos and how the pieces all fit together, there's a whole lot of that going on in the markets. There's a type of geometry, and I'm no math guy, in the markets that once you understand it and once you can actually see it, it's pretty fascinating. Now, we have an alert in the channel right now to take advantage of this little opportunity up here. This high at 41.78.5, we have to expect that to be good resistance until proven otherwise. But we also know that, little triple top there, it's 3 30-minute candles. We also know that this area may be good resistance. And so the alert in the channel, the window of opportunity, is this area here. I think it goes something like 41.76 to 41.78, I believe. And then right on up to the weekly zone. This is our highest weekly trading zone this week for the S&P. Now, when we publish the zones Monday morning, as we have done since December 14th of 2009, our traders get the zones on the chart. It's not a prediction that price is going to go to the highest zone or to the lowest zone. What it is a statement that we don't believe price will close the week above the highest or below the lowest, and each zone serves as fixed support and resistance. So if it's true, and I assure you it is, that price really does flow from support to resistance, back to support, back to resistance, over and over again and again, you need to learn to start seeing the zones. Like this zone is 41.47/48. Okay, you need to see that as fixed resistance on the way up. Now, when price pulls back to a zone, we expect that to be good support. And so this takes us all the way back to Sunday night, beginning of the week. There's support at the zone. The price, it takes 2 sessions to get to the zone overhead. 41.05 to 41.27. That's a 22-point move. That's over $1,000 per contract traded. Now, look how much time it took to make that climb. And look how long it took to drop right back to that same support area. An hour and a half. Markets tend to decline faster than they rise. And from this support, back up to this resistance, we get above, we'll pull back to the BBC holes, come back to this zone, we consolidate, we hit our target here, buyers come in, they get us back above the BBC, they get us back above zone. And when you see this happen, okay, you should understand how bullish this is. See this bearish cross? About 80% of the time, that is going to be good resistance. If you watch the show on a regular basis, I point it out every day. Okay, that's where we expect it. We expect resistance there. It's just how markets work, okay? It's how our strategy works. When you see a candle blow through that kind of potential resistance, then get ready, because something like this is probably on the horizon. What a beautiful move it was. And it wasn't over here because we pulled back, we held the support, Took us to our new all-time historic high. So there's an alert in the channel to trade this window of opportunity. Now that's just the initial target. If we take out that swing high, the all-time historic high, then our next resistance overhead is up at the zone. What if something different happens? What if price closes this red candle? What if it comes down and closes below the BBC? Okay, that's bearish. You got to start thinking about being short instead of being long. We have potential support right here. Okay, potential support. So now if we look further down the chart, where's the next area for potential support? At the bullish cross. So that gives us a nice window of opportunity on the short side. And that would call for an alert in the channel, something like maybe 4160. Would be 4160 down to 4158, down to 4156, and then the zone at 4147. So unless the market just grinds sideways into the close today, we will have a tradable move on the upside or the downside. We simply have to be patient and wait for price to get here or to get here. Because right here, we got nothing, okay, off of a 30-minute chart. Now in the morning in the room, Michael is teaching you and training you on a 4-tick range chart. We use the 4-tick range chart, which is a fast chart, so that he's able to show you multiple examples of the trade setup across multiple markets over and over, again and again, every morning. If we were using this 30-minute chart, you might sit there the whole 2 hours and never see one executable setup. On a good day, you might see one or two. So everything that I do on this 30-minute chart is the very same thing Michael is doing with the 4-tick range chart. He's just explaining it and showing and teaching you on a faster time frame. He's also teaching you the importance of always having a physical hard stop. Now, to keep it simple, we use an 8-tick hard stop on every market, on every trade in the training room. With the alerts, as I explained earlier, we use market structure, which is something we teach all passport holders. We use market structure to determine where the stop loss goes. The maximum we want to risk is $300 per contract per trade, less when possible. There's a 3-step process. If we go through all 3 steps and the chart does not give us a stop loss of $300 or less, then we pass and we wait for the next trigger or the next alert, or we look at a different market. One thing to remember, once an alert triggers, there is a greater probability of it triggering again than it not triggering again. Now, last night's CTA number on the S&P was to be long 4169. $61.69. Okay. Now from 41.69 to the high, 78.5. 9 point. We'll call it 9 points. at $50 a point. That's a $450 per contract move. Important prices, important areas, almost always tested. So price gets back below the trigger, triggers again. This time we get a swing high, 41.74.5. Then we get back below the trigger, off we go again. Now, not all triggers are created equal. This is exactly what we want. We want price above the BBC, of course, and climbing the back of blue and climbing. Over here, the scenario has changed. See how price is to the left of blue and climbing? But over here, blue and climbing is directly above price. When that happens, even though it's blue, it can be resistance. And for the most part, it was. And when blue and climbing turns to red and falling, and when blue and climbing does this, red and falling's coming, okay? Unless buyers come in and change the structure of the market. So this one would probably be, if you were going to take this one, you've got the step line right overhead, potential resistance. You'd have to keep this on a very tight leash or just leave it alone. We have so many markets, so many alerts. No reason to trade anything other than the highest probability, lowest risk alerts. So this is golden, this is not. And then by the time we get this trigger right here with red and falling overhead, no. Gotta let it go. We don't have to let it go. It's your trading business. You can do whatever you want. But my recommendation, let it go. Okay. Now the short side for the Dow or for the S&P last night was 41.43, which obviously we never got there. Next market, the Dow. The CTA last night on the Dow was to be long 33,980. $33,980. Now this first little trigger didn't go too far. It ran up 12 points, $5 a point, $60. Okay. But you might have stayed in it because this pullback did not exceed the maximum risk. The pullback from 39.80, what did we hit? 39, call it 50. That'd be 30 points at $5 a point. That's a $150 drawdown. Okay, so if you triggered here, you'd still be in it on the second trigger. So from that should be 33,980. Yeah. And so this trigger took us up to 34,138. So call it 130, so 150 points at $5 a point. So it's a little over $500 per contract traded. Now, what's price doing? It's pulling back to the BBC. Price always reverts to the mean. This looks an awful lot like the S&P chart. That's how the index futures work. They usually tend to track each other pretty good. As price pulls back to the BBC, we expect that to be good support until proven otherwise. But even if it is good support, I don't want to go long because I know this is potential resistance. And going to have to overcome the step line, overcome red and falling, potential resistance. I believe there might be an alert in the channel for this little window of opportunity up here. initial target up to that swing high. And then we've got one more zone overhead, I think, for the week. Yes, at 34,280 slash 285. That is the highest weekly zone this week for the Dow. So a nice $500 per contract opportunity. Next on the list is the Russell. Okay. And the number last night, CTA number for the Russell was to be long 2260. Okay, so from 2260, now we expect the zone overhead to be resistance. So it's from 2260 to 2264. It's 4 points. Swing high was 63.8. And then we dip back below the trigger here. Like we may have here. Yeah, we dipped 1 point below. So you had one tradable alert, or one tradable trigger, a second tradable trigger, and then a third tradable trigger. Each one worth roughly 4 points. This one spiked it, actually ran up to 2270. So this trigger led to a 10-point move. Now you may have stayed with it, or you may have just been, conservative and stuck with it. If you look over here, see this bearish cross? See how that led to resistance? The market tried 1, 2, 3, 4 times to get through that area. Couldn't do it. So it retraced to the zone where it found support. And this time around, it was able to overcome this potential resistance, which took us to the trigger of the CTA, which gave us 1, 2, 3 tradable moves. 1 alert, 3 tradable moves. The short side for the Russell last night, CTA, was 2246. And the swing low was 2243.3. So we'll just be conservative and round it up to 44. 2-point move. $50 a point. $100 per contract traded. And it looks like we may be about to get the second trigger. Now, on a short, we want the support of red and falling, which we have. We're below the BBC. We're getting below the weekly zone. Got red and falling. The only thing I would be concerned with here, if you take this trigger at the CTA 2246, just know that you're going to have potential support right here at 2243. So you could do it one of 2 ways. That's if it triggers. It hasn't triggered yet. You could try to grab these 2 points, okay, and then run a tight stop if it keeps going. Or you could let price get below the potential support, enter somewhere around, that's going to be really tight. You can see the zone is 2239/2240. And so you could trade 42 down to 40. That's kind of a tight squeeze. So you've got 2 options. Well, you've got 3. You can enter at the CTA. You could enter just below this low. Or you could just go look at another market. That's probably the best option. If you have to ask yourself too many questions about a setup, if it qualifies, of course, there are always going to be certain boxes you have to tick on each trade. But if you got to think about it too hard and too long, just go look for something simple and obvious. Okay. All right. Next on the list, NQ. CTA last night on the NQ, long above 14,045. $14,045 and the high 5.9. So from 45.59, it's 14 points. $20 a point, $280 per contract traded. And there's only been that one trigger. Okay. I see this more as like an iron curtain type of thing. If you follow the show regularly, we know that the price will often march right up to the CTA, grind to a halt, reverse, and head in the other direction. Because this is an important price, important area. Price had to make a decision here. It ventured above on the long side, but it was short-lived. That was still 14 points. At $20 a point, that's still $280. But for the most part, price got sent back to the zone. We had a bullish cross. We moved up to the zone where we consolidated. Only three things happen at a weekly trading zone. Most likely, 75% of the times, consolidation. Second most likely is rejection. Third and least likely is the slice, and when I run across one of those, I'll point it out to you. The short side CTA for the NQ was 13,909, which is way down here. And by the way, this vertical line separates today's session from yesterday's session. All right, next on the list, crude oil. Okay, now as I said, we rolled forward to the M contract, but last night's CTA, we were still on the K contract, and it's still tradable today. In the last 10 minutes, there's been 233 contracts traded in the last 10 minutes. But we're leaving this contract. We're now into the M. CTA numbers last night was to be long 63.90. The swing high was 63.88. That's what I mean about the iron curtain. The CTA will either turn price away. We came within 2 ticks of touching that CTA. Turn price away. So think of the CTA either as an iron curtain, or it may be a gate that swings wide and allows price to continue right on up to the trade to target at the zone. Okay. Short side, 62.45. And obviously, we haven't seen it. When we switch from one contract to the next, when we roll over, as the term goes, it's not unusual to see this, but we've seen some pretty muted action in crude here over the last few days. But if we take a bigger picture look at crude, let's just go at GCL. Let's look at the continuous contract, and let's put it on a daily. Let's get rid of all the notes. Now, am I trying to tell you, do you remember, some of you will remember, I talked about the transition when we were going through the transition here, the daily chart. If you don't remember, that's okay. once we got this bullish cross, the leg, retracement, leg. See how it hit red and falling? Pushed it back to the BBC. Then a leg, and then a retracement. Again, resistance. And then a leg, and a retracement to the BBC. And on this session, it couldn't get through red and falling. The next session, it did. Okay. So price went from, at the bullish cross, let's call it 40 bucks. It was actually like 39.40, but for the sake of math, let's call it 40 bucks. We went from $40 to $68. That's $28. A $1 move in crude is worth $1,000 bucks. Had you bought, and we did not suggest that you do this, and so this is no woulda, coulda, shoulda. I'm just pointing it out, okay? Had you bought one crude contract at 40 bucks and held it to 68 bucks, that would be a $28,000 move. And let that sink in. A $1 move is worth $1,000 bucks. This is a $28 move. That's $28,000 per contract. Imagine if you earned the right to trade 10 contracts. Huh. It's over $250,000 from November to March. Now, did I take this trade? No. Am I insinuating that anyone here or anybody that has anything to do with CFRN took this trade? No. We may have had traders take the trade. I don't know about it. Okay. I'm just trying to show you how much crude has moved. So the fact that we're now going sideways for a few days as price, attempts to sort itself out. If we drew fibs here, from the low to the high, what we hit? The shallowest fib retracement, the 24. Price is trying. It's above the BBC. See how it struggled? Once we got below the BBC, we tried, and then crude finally broke through, closed above the BBC, took out that swing high. So what's the next obstacle overhead based on the daily chart? Right there. And then, of course, right there. If we use our Fibonacci price extension tool, which is the same 14th century math, just turned on its head, go from the low to the high, I'm going to have to get rid of these so I can do it. From the low to the high to the retracement low, this tells us where price may find resistance on the way up. There's the 24% price extension, which lines right up with that swing high. If we take out the high, the next area, you can think of it as a target or an obstacle. It's both. 70 bucks, 74 bucks, 78 bucks, 91 bucks. Did you know crude once traded at $140 a barrel? And then we saw it go to almost, what was it, 30 bucks a barrel? Did it dip into the 20s? Now that seems almost impossible, right? Kind of does to me. So let me take this opportunity to do this. Let me bring up the ES on a different chart. And I'll use a continuous. Hang on. Here it comes. All right. So, get rid of that. And we're going to change this to monthly. And we're going to do a lot of squeezing. Maybe that's a little much. Okay. Now let me do this. Now, if you think the $140 crude down to $30 crude is extreme, this will blow your mind. First, you have to believe that important prices, important areas are almost always tested. The dot-com run-up, the birth of the internet, took us up to roughly 1,500. And then the bubble burst, and we dropped to, I know you've heard this before, 666. True story. Then, over the course of 3 years, 4 years, buyers were able to run this thing back up to 1,500. Then we had the financial crisis or the real estate crash, whatever you want to call it, in 07, 08, right? Down she comes again. So, if you, like I, believe that important prices and important areas are almost always tested, then you have to embrace the possibility, okay, this isn't a forecast, this is an observation. We hit 1,500, turned away. Important prices, important areas, that's the all-time historic high there. Crash, down to 666. And then a rally, back up to 1,500. Another crash. Hey, this is the one that went to 666. Okay. Then, pretty easy please, we got right through that 1,500 area on the third attempt. What's missing from this picture? You've probably heard that what was once resistance often becomes support. Is it possible? Is there a world in which the S&P 500, which now sits up at 4,100 plus, almost 4,200, could it really come back to test this level from the other side? Tested once, we hit it the first time, tested it again, third time broke through, but we've never tested it as support. Resistance, resistance. This huge green monthly candle here, is it possible? Well, all I can say is you should embrace all possibilities. Does that mean you shouldn't go long right now in the S&P? No, it doesn't mean that at all. This thing may keep climbing. We may never see 1,500 again. But I'm not going to rule out the possibility, because that's how markets work. Okay. Moving on. So, big picture crude. If we go back a little bit, the pendulum does swing both ways. Oh. Crude dropped to, I said crude had traded from 140 down to 30. Look at this. That's $6. I can't even get in enough data here. Take us all the way back to when we were over $100. But look at that drop. Look, I mean, 60 to 6. That's a $50 drop, just rounding it, $50. One contract, $50,000 move. 10 contracts, that's a $500,000 move. Just food for thought. And here's crude today. Just cruising along. Doing what crude does. Okay. All right, we got two more markets real quick. Gold. Last night's CTA on gold was to be long, 1775. And we triggered it and ran up to 84, 84 and a half. Yeah, basically $1,000. Gold pays $100 a point. So you got 10-point move, $1,000. And price gets back below the trigger. Now you see how price and the step line are to the left of blue and climbing. On this trigger, yes, price ripped right through the step line, but boy, it sure ground to a halt. As blue is on its way to becoming, as blue and climbing is on its way to becoming red and falling. See that resistance there? So, is this a trade you should take? Well, as long as you understand what you're getting yourself into. This is the picture you want. Doesn't make this untradeable, but be aware of where your obstacles are. Here and here. Okay. All right, last on the list, silver. CTA last night on silver. Long 26.11. $26.11 to 38. Alexa, what's 38 minus 11?
38 minus 11, 27.
Okay, so that's 27-cent move. 2 pennies is $100. So it's about a $1,300 per contract move. We get below the trigger. And we start to rally again. But what happens? Price runs into red and falling, so it's struggling here. Not all triggers are created equal. This is what you want it to look like. Not this. This, not this. Now, if price can overcome red and falling, there is a window of opportunity here. Okay. But you got to be patient. You got to let the buyers and sellers duke it out here. I want to get above the high of that candle. I want to trade inside the body of this candle. No friction. Boom. Boom. Now, you don't have to take profit here, but I would certainly tighten that stop up. Lock the back door. Leave the front door open. Trail by a couple ticks, knowing that 90% of the time it's going to back up 2 ticks and take you out. No problem. But every now and then there'll be a burst of energy and it'll take you to new heights. Lock the back door, leave the front door open. There you have it. Around the world, all the markets. This is a Friday afternoon. By and large, Friday afternoons are pretty quiet. Back to the S&P, we had that nice run up, and we had these not so perfect setups here. So really, this just had one that fits the profile. And now Price has triggered again, but it's got red and falling right overhead. See this trigger here? It hit red and falling. Red and falling has slapped it right back down. Now, we don't know what's going to happen next. But earlier in the show, I told you that this would probably happen, and it did. Not because I know what's going to happen next, not because I have crystal balls, not because I can see into the future, but because we understand how markets work, how price flows. You can know that too. You just got to become a member, become a part of the family. If you are sick and tired, buying more trading stuff filled with empty promises, you really should join our family. If you buy a passport, we don't have anything else to sell you because the passport includes everything we do, everything we've ever done, and everything we might do in the future. You're locked and loaded. It is a lifetime membership. My life or yours, whichever runs out first. Well, actually, there's me and Michael, so the odds are in your favor. So, because by law, we're not allowed to ride on the same city bus or fly in the same plane at the same time. Just kidding. But we wouldn't for you. And this is everything the passport gives you. Everything a trader needs. A live instructor who teaches you each day, move by move, tick by tick. You can watch videos of people trading till the cows come home, and you'll never learn how to trade that way. You'll get really good at watching videos of people trade, but you won't learn how to trade. The only way to learn how to trade is to trade. So when you become a passport holder, we want you trading day one in that live training room, just not in your cash account. In the simulator, in the demo. This is how we teach you our methodology and our strategy, not by you just sitting there and watching Michael, but by you watching him, listening to him, understanding what he's doing, why he's doing it, and then mirroring that action to the best of your ability in your demo account. Once you've put together 10 consecutive days in a row where you reach your goal in 10 trades or less, our blueprint will give you the green light to go live with one contract. Once you go live with one contract, your goal now is to increase your cash balance by $2,000. Once you do that, the blueprint gives you the green light to go live or to add a second contract. The difference between the first one and the second one is huge, because that second contract is being added with profit you earned in the market. The blueprint will tell you when it's time to add number 3, number 4, number 5, number 10. You only add one at a time when the blueprint tells you it's time, and you only add with profit you earned in the market. It's that simple. Nothing else to buy. No recurring monthly fees, annual fees, nada. No siree. You're done. You'll never have to spend another dime on trading stuff. Now, you might choose to, but you certainly won't need to. Michael teaches you in the morning how the methodology and the strategy works. Around the clock, I send you alerts, windows of opportunity, so you can practice what you're learning in the room. And then pretty soon, you've got your 10 consecutive days in a row, and you're going live. One contract. Now, 2 points a day in the S&P, it's $100 per contract. Probably won't pay your bills. But by the time you've earned the right to trade 10 contracts, the same 2 points are worth $1,000. That's $250,000 a year based on the number of trading days in a year, which in the top 3% of wage earners worldwide. Now, obviously, if this were easy, everybody would do it, right? But you've already learned it's not easy. The good news is it can be simple. Starts with the passport. Show up for class every day as often as you can. Attend the workshops, book the one-on-one mentoring sessions. You step into an entirely new world as a passport holder because you now have a mentor. You have someone who will meet with you live in real time and coach you through the process of learning how to trade. And you get 2 hours a day, 5 days a week of group training. That's 10 hours where you're able to ask questions. Then you have another 10 hours a week of the afternoon broadcast where I walk you through every one of the alerts like I just did today. So that's 20 hours of group training every week. But on top of that, you have unlimited access to one-on-one mentoring. And you'll never have to buy any more trading stuff. Unless you just want to spend money. Okay? So go to eminifutures.trading.com. Do it today so that Valerie can get you set up so that when the markets open Sunday night at 6 p.m. Eastern, you'll be in the alert channel with us, in the discussion group with us, and you'll be ready to rock and roll. But you're going to rock and roll in that demo account until you put together 10 consecutive days in a row. Only then will you consider going live. And you'll only go live with one contract, and you'll earn the right to trade 2, and then you'll earn the right to trade 3, until you're trading whatever size you want to trade. And that brings this week to a close. The last 3 days we've talked about turning your losses into gains. Today, our good word for the day takes a little different approach. Your identity determines your inheritance. Romans 8:16. We are children of God, and if children, then heirs. Heirs of God and joint heirs with Christ. When our favorite sports team wins, what do we say? We won. What do you mean, we? You got a mouse in your pocket? You weren't on the field. You didn't get tackled. You didn't throw or kick the ball. You didn't even score a single goal. What do you mean? We won. You mean that because the team you support and identify with won. So you won too. Now, when your favorite sports team wins, you say, we won, right? What about when they lose? You bunch of losers, right? That's not my point. I just threw that part in for free. But there is an important spiritual truth here for you as a redeemed child of God. When Jesus died, you died with him. When Jesus arose, you arose with him to walk in the newness of life. Romans 6:4. The difference between you and the team that won is that you will never actually be an active part of it. But when Jesus won at the cross and you accepted him as your Savior, God positioned you in Christ. 2 Corinthians 5:21 says, today he sees you clothed in the righteousness of Christ. Paul explains it this way. The Spirit himself bears witness with our spirit that we are children of God. And if children, then heirs. heirs of God and joint heirs with Christ. Did you get that? As a redeemed child of God, you are an heir of everything your heavenly Father owns. And it gets better. We're also joint heirs with Christ, meaning that whatever Jesus is entitled to, so are you. When you understand this truth and begin to walk according to it, you start to identify and claim the blessings God has promised you in His Word. These blessings include such things as grace, forgiveness, healing, provision, guidance, strength. Who doesn't want some of that? Your identity in Christ entitles you to all these things. That's our good word for the day. Hope you have a great weekend. Check the Breeze channel Sunday morning in Telegram. I'll post the link so that you can join us for church. Many of us gather together each Sunday morning online to watch the Elevation Church experience. They got a great worship team. The video I played at the beginning of the show, The Blessing, was written by Carrie Job, her husband, Pastor Steve Furtick, the worship team at Elevation. A lot of the popular contemporary Christian music that you hear on the radio today was either written by and or performed by the Elevation worship team. And so hopefully Sunday morning, check the Breeze channel. The link will be there. On the days that I forget to post it, Stefan normally does. And as a family, just as when you were growing up, your family went to church. Well, in this modern day age, we go to church together. People all over the world attending church together from the comfort of their own living room in their Barca lounger on the big screen. It's a good time. I hope you'll join us. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.